Hi guys, welcome back to another video, and today we're here to talk about a stock, a penny stock actually, and that stock is Fubo. You guys might know them if you're into watching live TV or you have a subscription service for your TV viewing. But yeah, without further ado, be sure to like this video if you enjoy it, if you add some value to your day, and also subscribe to the channel. We hit 100 subscribers. Thank you guys, and yeah, let's get right into it. So first you can see Fubo, if you invested in their stock a year ago, you're up 113%. This looks pretty good. I mean, I'd be satisfied with that return in a year. I think any investor would be satisfied with that return, more than satisfied. But that is just a small glimpse into what this company actually has had over the past 5 years. They've been down 63, almost 64%. And then we can see that they almost hit $50 a share at one point in time, and now they're worth not even $3. So Fubo's definitely been through it. This is a stock that you're investing in, this penny stock, based on hopes for what could happen. You're not really investing on the case that they have right now. But let's check into it right here. We can see this article right here I actually was viewing before making this video. Very interesting what they talked about with Fubo, how there's a future with Disney would be a fairy tale ending. So Fubo actually filed a lawsuit against Disney, and when you look at the Fubo stock price, this one right here actually is a better depiction. But when you see this jump, I mean, they were trading for around $1 per share, but then they jump to over almost $6 in a day. Now they've kind of consolidated around $3, but that's because they actually did partner with Disney. That was a pretty big thing for them. That partnership definitely, after that lawsuit, they actually won the lawsuit against a big brand like that, which is very impressive. But that partnership is going to do a lot for them now, because they will get, even it just says on here, it's still about a year away from closing, and it isn't expected to close until the first half of next year. But Disney's providing a lot to Hulu. I mean, we can see right here that 8 million of them belong to Google's YouTube TV out of the 20 million US homes that subscribe to live TV. And Fubo just has 1.7 million paid subscribers at the end of 2024, less than 10% of the market. But Disney's live TV streaming platform has 4.6 million subscribers. So yeah, like it says right here, pairing up the two platforms would give them a fighting chance against Alphabet. I totally agree. I think more than a fighting chance, that's almost an equal chance, and I think Fubo can definitely capitalize because of their live sports experience that they offer. And we can see that the average revenue per Fubo account is $87.90 per month. That's not a small number. And if you think that's high, Disney's Hulu Plus Live TV is taking in an average of $99.22 per subscriber. So, I mean, the subscription rates are very high, as we can see, but this is definitely something that people are buying and paying for, and Fubo wouldn't be so bad on its own, is the second point that they make, which I totally agree. I mean, I invested in Fubo, before they had this deal with Disney, before they were doing that. So I definitely think that Fubo on its own would not be all that bad. Analysts see Fubo turning profitable on an adjusted basis next year, turning that corner on a reported basis in 2027. I totally agree. I mean, Fubo, that is one of the big problems for their company, is that if we check it out over here on Robinhood, we can see that Fubo actually is not profitable. They have been beating earnings like a lot. I mean, every past earning they've been beating them. But they are still at a negative 0.3 EPS as of right now, and they're expected to be negative 0.8 EPS next quarter, but we'll see what actually happens. It looks like they've been beating by a pretty good margin. So yeah, I mean, Fubo on its own wouldn't be that bad, and yeah, I mean, that's pretty much the gist of it. The recent pullback is an opportunity, obviously. I agree with that. We can see, I mean, look at Hulu Plus Live TV streaming has always been in Disney's back burner, while Disney keeps trying to bundle Disney Plus, 125 million subscribers, and Hulu, 50 million subscribers, and ESPN Plus, 25 million subscribers. I mean, look at all the subscribers that are going to get added to Fubo. And this is what I really wanted to show, is Fubo's investor presentation right here. As we can see, this is Fubo, and then you're adding the Hulu Live TV aspect. That's going to add a lot to the company. Greater innovation, definitely, but we can see their North American subscribers are going to go from 1.6 million to 6.2 million with the addition of Hulu, which that's definitely, I mean, that's almost, that's a 3x. It's more than a 3x. It's almost a 4x. Definitely think that's very good. And we can see the total revenue is also going to go to, 4x right there as well. Very, very nice. And then revenue growth, it's going to, I mean, this is a bigger company, but the numbers are going to be much larger revenue growth. So that's what we like to look for. And then we can also see right here that Disney is, Disney adding Fubo is going to kind of propel them to, compete with these, YouTube TV, DirecTV, Dish, and Sling, and such as that, brands like that. It's going to kind of like make them a big player like that, because now they're just half of YouTube TV. So this is actually a really good acquisition for Disney if you think about it. But yeah, Fubo is definitely a company on its own that I think is doing very well, but they're going to do even better when Disney, when Disney does eventually, that merger goes through. For sure, it's expected to go through, but anything can happen. And we can see that there's a cash settlement payment of $220 million from Disney. That's going to be very good for Fubo. I'd take $200 million. And then we could see that there's 1.6 paid subscribers in North America. Their subscription revenue is 92% of their company. That's very good, because subscription-based companies that get most of their revenue from subscriptions are companies you want to invest in. Those are things that people usually don't cancel, and if they do cancel, you've probably been there before, but it's a long process to cancel a subscription, and usually people just don't do it. I like that that's most of their business. That's where their money is coming from. So their year-over-year revenue growth is 24%. That's very high for any company. Their annual total revenue is also $1.6 billion. That's a lot of money for a very cheap stock. And we can see that Hulu, they just have higher numbers than Fubo, but them combining is definitely gonna make their numbers all a lot higher. And we can see that the growth is looking very well. They're expected to grow what looks about right here, about high single digits year over year once they do merge together, which I definitely like to see. We can see this is what they're giving them in the loan, and then that's pretty much all. There's not too much to talk about with Fubo, but which it's expected to go through, it should be a very, very good deal for everyone involved. And we can see that Fubo as a business on its own, it's growing their revenue quarter over quarter. Still not profitable, but we can see they're also growing their profits. There's a lot of things in Fubo that are going well, looking very good for the company. And them merging with Hulu and Disney is just all the other reason to buy more shares of this company. I do not have as many shares as I'd like to have of this company. I only put a really little bit in, honestly, just around $50. But I have 30 shares of this company, and I think this is a company that can be worth a lot of money one day. So I think those 30 shares will probably go somewhere eventually, and definitely buy more right now. I think Fubo, it's definitely more expensive than it was. I don't know, a year ago. Obviously, you could have bought it for $1.26. My average cost $1.38, but you also could have bought it for $5.46. So I think $3 is a fair price to pay for this company. Definitely just a speculative stock. I wouldn't make this, the main player in your portfolio. I'd definitely keep it in that, 1 to 5% range of your portfolio, and I think I'd feel good with that. That's pretty safe. But yeah, guys, that's pretty much it for today. I think Fubo stock is definitely a buy right now. Definitely a speculative stock, but stocks like this that are very cheap can also yield a lot of money if played right, if bought at the right time. So yeah, invest in this at your own risk, but I do think it's a good investment. I'm going to probably add some more as time goes on. And yeah, I appreciate you guys for watching. Be sure to like the video if you enjoy it. Also subscribe. Our next milestone is 200 subscribers. That's coming next. Thank you guys so much. I appreciate you for watching. Catch you in the next one. Peace.